Earlier today, billionaire investor Bill Ackman identified two companies that he currently owns that's around his cost basis that he thinks has a potential to roughly 10x in the next year or two, or 10 times his money. Now, this makes for what he thinks could be one of the best bets in 2025. So if you too are looking for compelling ideas for this new year, happy new year, by the way. My name is Daniel. You're watching Unrivaled Investing. Let's dive right in to understand what is Bill Ackman investing in? Where does he find value? And if you enjoy educational investment content, I appreciate you hitting that thumbs up, hit that subscribe button. Looking at Bill Ackman's portfolio, he manages Pershing Square, manages over $12 billion. A lot of household names like Chipotle or Hilton or Nike or Alphabet. This isn't what he thinks can 10x. What he owns that he thinks can 10x is Freddie Mac and Fannie Mae. Freddie Mac, FMCC, Fannie Mae, FNMA are the tickers. And earlier he tweeted today, as we look toward 2025, one investment in our portfolio stands out for large asymmetric upside versus downside. So I thought I would share it. So he's talking about this type of 10x potential. We have owned Fannie and Freddie Mac common stock for more than a decade. Today they trade at or around our average cost. As such, they've not been great investments to date. So he hasn't made money. He's been sitting on it for a decade, but he thinks that's about to change because with President Trump's second administration, he thinks President Trump likes to make big deals, announce one of the biggest deals in history. And he thinks that the removal of Fannie Mae and Freddie Mac from conservatorship and the potential stock issuance in the next year or two could get these companies around $34 a share. Now, is that actually a 10x if you were to pencil that out? Well, currently, Freddie Mac, FMCC, currently trades around $3 a share. And you could see over this past year, markets has been waking up. It was previously trading around $1 as President Trump odds were going up and he gets elected, jumps to $2 to $3. Now Bill Ackman's talking his book, talking about this idea, jumping another 30% today. Same thing with Fannie Mae. $1 for most of this past year, just sort of bumping around. President Trump gets reelected. Odds are jumping higher that something's going to happen here. Some value might get unlocked, jumping between $2 and $3 a share. Once again, Bill Ackman talking his book, jumping nearly 40% today. Now, this is the same Fannie Mae, Freddie Mac that was part of the financial crisis. You can go watch a movie all about it. You could go check out, The Girl in the Bubble Bath to understand. But quite simply, Fannie Mae is a leading source of financing for residential mortgages in the U.S. They are government-sponsored and stockholder-owned company. So we'll talk about who actually owns it. Now, you might get googly-eyed and go like, oh my gosh, I don't actually understand their business model. So I do appreciate the girl in the bubble bath. But you buy loans from lenders. That's what they're doing. They're not actually providing loans themselves. They're buying the loans from lenders. They then package those loans and guarantee them as mortgage-backed securities that global investors then buy. So the way to think about it is Fannie Mae is guaranteeing a basket of these loans that they've purchased from the lenders. And in return, they get, they don't get Margot Robbie, they get a nice fee. They get a guarantee fee. And currently, Fannie Mae owns or guarantees an estimated 1 in 4 single-family home mortgage loans, or roughly 20% plus of multifamily mortgage debt. So they own a huge part of the U.S. mortgage market. This is a critical player, Fannie Mae, even after all the, sort of the chaos of the great financial crisis. And you see it's still operating at a significant profit. You see it's generating around $17 billion in net income in 2023 and tens of billions of dollars in revenue. And that revenue, as I mentioned earlier, that's a guarantee fee that the lenders that they're buying from, these lenders pay a recurring fee because they're providing a guarantee on this basket that's then sold to global investors. So this is a extremely complex business model. It's a leveraged business model. It's tied to the housing market. But if you believe this profitability is sustainable, I think Bill Ackman might be right that it does have huge upside, also assuming a huge unlock in terms of how it's run and governed. Now, during the great financial crisis, the U.S. Treasury invested via a senior preferred stock offering that effectively gives them 80% of the company. Since then, and there's been this sweep where, they generate billions of dollars in profits, but it doesn't accrue on their balance sheet. It doesn't build up. Think of it as US Treasury said, okay, we're going to cover you during the great financial crisis, but all your future profits, they're just going to get swept to us. Billions of dollars each year. And that's, since the date of this filing, they've received, the US Treasury has received $120 billion from Fannie Mae through this agreement. So they've made a profit on this. And this is where, once again, Bill Ackman thinks that Donald Trump ran out of time during his first administration, where he had his Treasury Secretary Mnuchin taking steps to sort of unlocking this value where it's no longer completely owned by the US government and completely run by the US government. And he thinks that you will see a successful emergence of Fannie and Freddie from conservatorship in the next couple of years during his presidency, and that by sort of retaking these companies public, maybe some sort of stock issuance as well to further buttress their balance sheet, because there is sort of a hole right now in their balance sheet because all the cash is currently being swept to the US government. So you, let's say, issue, tens of billions of dollars in new stock. If you did that to give it a fair value, he thinks that it'll unlock hundreds of billions of dollars of additional profits on top of the $300 billion in cash that the Treasury has already received. So you're talking about a $600 billion that's, sort of been, will potentially be received. 300 already received, 300 that they could receive by sort of selling their shares in the future. And he also views it as a potential optical win because currently Fannie Mae, they have these guarantees. Fannie and Freddie have these sizable guarantee book, saying, look, we have all these liabilities that we're guaranteeing. That's roughly $8 trillion that Bill Ackman's calling out. Well, if cutting the deficit and cutting, U.S. liabilities is something that, President Trump is going to be pushing, optically, just by taking this public, you could be removing that $8 trillion roughly liability from the U.S. government balance sheet. So optically, it could become a big, look at what I accomplished, a big deal. So I definitely could see that element that Bill Ackman's talking about, announcing, a huge deal. So what are my thoughts on Fannie Mae? Fannie Mae and Freddie Mac have very similar business models. So I'm keeping this, very high level perspective on, my thoughts, recognizing it's a very complex situation. As always, this is not financial advice. Also, recently, Michael, a premium member of the Unrivaled Investing community, shared, so far the subscription has paid for itself in 3 months. This follows Harish saying, you bring immense value with your unbiased insights and a strong focus on fundamentals. The profits I made from just one of your ideas has already covered the premium subscription for several years. He's talking about Unrivaled Investing. If you're looking for compelling ideas, come check it out. That's unrivaledinvesting.com. So when I think about my personal investment checklist, I think about Fannie and Freddie, and I think they are extremely complex special situations. This is quite unlike most of my portfolio. Most of my portfolio, I'm looking for obvious aligned management. Maybe you have the founder at the helm or a CEO that owns 20% of the company, a compelling valuation. Fannie and Freddie, we'll talk about the valuation in just a second. I prefer obvious growth potential. I don't own Tesla, but an example with the obvious growth potential is saying, yeah, they're going to be launching the Optimus robots, and that's going to be, a huge growth market. Something where you can easily pencil out, yeah, this is the reason why, or management has clearly penciled out, yeah, this is the reason why this company is going to 2x or 3x over time. And it's a very low bar for you to think about because it's easy for you to understand. You could practically write it in a crayon and go, okay, I understand why this business could be much bigger in the future. No blow up risks. You're talking about things like, does it have a lot of debt or single customer issue? And I'm looking for win-win types of setups. It's a fairly simple, and straightforward checklist. And I'd say Fannie and Freddie doesn't pass it just because of how complex it is and you don't have the aligned management. That said, it is possible to, make room in your investment portfolio for special situations. And I think this really is a unique and special situation. So it is important to have, maybe consider that. Every investor needs to consider what's right for their own portfolio. So I don't own any at this point, but I'm thinking about it. Bill Ackman's a shrewd investor, and this certainly is one of those asymmetric types of bets that is changing, and the market clearly is starting to wake up to the odds that this does change. And you see that the US Treasury roughly owns 80%, and the remaining float of 20%, Bill Ackman's Pershing Square owns roughly half of. So he will, do quite well, making billions of dollars if this does go out of conservatorship in the next year or two. And looking at Fannie Mae, You could see year to date around $13 billion in earnings. So let's say ballpark $15 billion in earnings for this business, a growing net worth. What is that worth? A lot of uncertainty, high complexity. Let's say a significant discount to the market. Let's say only 15 times earnings. Well, 15 times earnings on $15 billion in earnings gets to around $225 billion. If you assume some dilution where they have to issue stock, because they'll likely issue stock in the next year or two if they indeed go out of conservatorship, that does get to around $30 per share. So that is quite interesting. This is at the deeply compelling valuation, but there is a lot of uncertainty. There are these capital holes because all this capital, as I already mentioned, is being swept, from the company to the U.S. Treasury. And that was part of the policy during the great financial crisis. They said, okay, we'll take it over, but all those profits is going to sweep to us. So you are going to need to see some sort of restructuring, recapitalization, issuing a sizable amount of stocks. So the capital markets are going to need to be open where you can issue tens of billions of dollars in new stock for Freddie and Fannie. So there is a lot of uncertainty. There's the regulatory uncertainty. You have to get the U.S. Treasury to approve, probably Congress to approve as well. So there's all these different elements where you need to make sure the different bodies in power will approve. And this will take time. And so far, Bill Ackman's been wrong. He's been sitting on it for a decade. That said, he's an extremely shrewd investor. And he previously was actually short Fannie and Freddie, going into 2008. So he made a lot of money on the way down. So far, he's sort of been sitting on it when it's flat. But I think it's two concluding thoughts for you. One is there's a little bit of caution here just because this is an immensely complex, probably like on a scale of 1 to 10, this is like a 12 type of complexity type of situation. Incredibly hard. And I'm just covering a sort of surface level analysis. Bill Ackman has been sitting on this for quite some time. And, he has a history of, calling out ideas in literally the last week of the year when everyone's on vacation and saying, yes, here's this idea, and causing things to move. And you might say that that's him positioning so that way he gets a nice little year-end bonus for himself, because he did the same thing with Herbalife years ago when there was effectively no, trading volumes, and it caused, Herbalife stock to fall 40%. Now, he might later on say, oh, well, I was proven right because Herbalife settled with the SEC. But at the time, I just can't, I'm a little suspect of the timing of these announcements. Like, he could have either waited for when everyone's back from vacation, because right now it's literally right before New Year's. Once again, Happy New Year. So there is a little bit of that of like, hey, maybe you are getting that 30% plus boost. That said, I do suspect that he will profit from this. I do suspect that, it could play out quite favorably because it is ultimately a business, an entity that creates value for a lot of families, homeowners, even renters, because, you have the mortgages tied to multifamily units. Because by having something that's guaranteed, effectively backed by the U.S. government and global investors that can then invest it in those products, you are sort of making an environment that I'd argue where interest rates on those loans, knowing that those loans can then be resold to Fannie and Freddie, does make it easier and cheaper for first-time buyers or, homeowners or apartment owners. So I do think that they do have a role in the capital markets. It's just going to require some cleaning up. It's going to require a lot of uncertainty. It may take a couple of years, but I do see this and understand why Bill Ackman would call this out as one of the best ideas for 2025 and why he's calling it out as having 10x potential. It makes sense to me. At this point, it's not part of my journey. I think I prefer the simpler ideas, but recently I called out to my subscribers a tech company growing at 80%, that's founder-led and trading at 20 times free cash flow. That's a lot easier for me to sort of understand. But, maybe I change my mind. Maybe I make this a part of, a small part of my journey. I don't think I'd make this a big part just because it's so complex. whether or not Congress or the Treasury or, the entities that oversee them, Freddie and Fannie, will approve this. It's tough to say. And so anywho, I hope this video has been helpful for you, talking about a potential compelling idea for 2025. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.